The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and exclusively soft host. We were down, more than 30 points on the S&P? Is that right? We're now just down 7, 26.40. 77 is the last day. Dow's off 190, NASDAQ's actually up 17, Russell's off 5. And of course, just a lot of rocking and rolling before we get Apple earnings tonight, the FOMC meeting tomorrow at 2. So for our sit rep here, there's a lot of hurry up and wait. When we actually look and see what happened today, or what at least I'm speculating has happened, was that they've got everybody probably more bearish, if we could put it on a scale of 1 to 10, than they were bullish going into January, late January. So as far as I'm concerned, the majority of the market's not with the current zeitgeist of traders. But what do we have? We had a record for quotes, thanks Nanex and Eric Hunsater, a massive ton of actually options this morning. And we'll talk about how, at least what the option market makers think is going to happen with Apple after the bell tonight, but with the market themselves. And to a great deal, it looks like, at least I talked to one dinner today that had a fairly bright idea. Maybe I was too tired to see it, but sometimes someone just tells you something, you go, I think that's most likely the right answer. And it looks to me like there's a lot of people that are short puts over the last few days. In fact, we've had kind of a record number of people going long the S&P, or looking at the S&P going higher, and trying to sell as many puts as on the stocks going lower. So we've got, I think I talked about it yesterday, and now everybody's making fun of me, the bipolar market, and where everybody thinks that individual stocks are going down, but the market's going higher. Well, that's not quite it. I think they've gotten everybody fairly bearish. They got them all in a lather, all hot and bothered. And guess what? These guys are going to make 50 to 100% on their money if they can get this market just to close above 26.50 on the 18th of May. Much less, they can make that 100% fairly easily if they get to the S&P gets to 2,700. So there's a lot of people going to make a lot of money going to go to money heaven for people buying downside protection here when everybody is buying it. I'm not buying it. I think you need to really think about going along when there's blood in the streets. And when everybody's euphoric, you got to be nervous. And you got to turn around your natural impulses. Some people call me the counter-culture trader, but that's it. Yeah, we'll show the chart on Apple, but yeah, option market makers have made a rather large bet that come tomorrow morning that Apple is going to be at 170 or higher. So don't see a lot out here that says anything different. Up $2.65, 167.91 on the last tick for Apple. And yeah, I don't know what they're going to do. They're going to buy all their shares back and make it $1 billion dollars a share. And who knows? But I think they've done and gone, at least the market financial infotainment folk have gone to extreme lengths to make sure that the worst that anybody could believe is in on Apple. If they were going to sell it, they were going to sell it already. But, you know, if it's up $2, $3 in the morning, is that beyond the scope of reason? It's not. You know what it's going to do? It's going to send a ton of money to money heaven in those puts, because everybody has been worried about it. So we'll see. But certainly the option market makers don't see Apple going much lower. In fact, they see it going just a tiny bit higher, a couple percent tomorrow. And all they need to do, because they sold a ton of options for this week, for this Friday's expiration, is to hold this market off. Long term, Apple looks like 170 right now from on the 18th of May for the monthly expiration. So there's just not that much going on. We always like to come to you at this time. Almost forgot that. Wrong mic, wrong mic. I don't know what that means. Wrong mic. Check my microphone settings. Okay. Audio and video settings. Yep, it's done it again. Every time I get an update now, it seems to change the microphone. Does that sound a lot better? We will play that clip yet again here today.
The following takes place between 2 p.m. and 3 p.m.
Well, guess what? Apple rolled out their big update, and for whatever reason, Skype doesn't. Everything else holds it, but Skype does not. I installed it this morning, and quite happy. You're not going to see a lot of stuff in front of you, but or changes, but there's some very interesting stuff if you're doing what I'm doing behind the curtains. They call it the Creator's Spring Update. But seems to be working real well. It's just Skype doesn't hold its settings. I'm going to have to give it a spanking to let everybody know. Okay, yeah, update. Yeah, it seems to be running well and smoothly. So we'll see on that. Anyway, we're off 5 points on the S&P cash. Can I get that right now? Monday, yeah, okay. Let's just go ahead and look at the options curve because I just got about a minute before the first break, and we'll look at it. And here's what it looks like going in tomorrow. I mean, it's, you know, could you get the outlier to 166 to 174? I think you could, but, you know, when I've looked at this and watched it for the last 5 days, you know what it's been? Every day when I've looked at it, whether it's weeklies or the monthlies, it's been 170. And I mean, right there at that break. So I'm thinking that they've made a decision a while ago that that is where they thought that the stock was going to be come Wednesday morning. You know, anywhere around there, they're going to be able to blow all the options premium out of anything that, you know, is not close. So looks right now, Apple is one huge payday for option market makers. If the stock opens somewhere around 170 in the morning, they can eat all that premium up in a real hurry tomorrow. We'll talk about history when we come back, and then we'll get into some charts.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And what are we talking about? Oh, we were talking about odds in the Tiger's Den during the break, and we'll be talking about that the 16th when I do my webinar. We'll talk about how you can use options to give you an indication where the street thinks that things are going. And, of course, they're about 80% right. I mean, at least the odds are. So if you know how to read the charts, and I'm talking about the option SMILE, you can get a pretty good read about where things are going. Let's talk about a little bit of history.
That it's all just a little bit of history repeating.
On this day in 2000, the U.S. government removes selective ability from its global positioning system, improving the accuracy of civilian GPS devices from 100 meters to 20 meters. Right now, for the most part, you should be able to get better than 6 meters. There's a thing called WAAS, W-A-A-S, and they are local stations that send data back up to the satellites to let the satellites be a little bit more accurate in your area. They can basically cure some of the problems with radio signals going through the ionosphere. What was it? A couple of months ago, maybe 3 months ago, the first super high accuracy clock was launched into orbit. That constellation that the Navy put up there for those GPS satellites use a clock that's fairly accurate, but we're talking about a lot of zeros, about the length of my arm, and a 1. And by using these new clocks, the length of my arm and zeros plus a handful more zeros at the end. But you should be able, in this next iteration of GPS, you should be able to get down to about 1.5 feet. They're going to be able to make that available, selectively available, the accuracy. So my guess is that if you live around Washington, D.C.,
or maybe a military base or something like that, you're going to find out these things are not so accurate. But at the end of a runway, going to be highly accurate. Like I said, within probably this next generation is going to be within a foot or two, and that's 95% of the time. In fact, all these numbers I gave you were 95% of the time. But 100 meters to 20 meters to about 2 meters right now with selective ability with that WAS system, and that's going to get down to inches and feet 95% of the time. So we'll be looking forward to a lot more in the global positioning system in the near future. Okay, so what else do we have going on? Well, we already showed the chart. We already showed the chart for Apple. Let's look at the, or at least the options. Let's take a look at the actual chart out here. And it's, you know, you've got this gap right about 171, 172. That's probably where resistance on the upside is going to be. Came down with 60, I'll call it 64.5 million shares on the 20th. That's what we're getting into today. Volume is not anywhere that close. But again, earnings tonight, so I can't imagine a lot of people. But what we do have in Apple, let's go ahead and look at it. It's the first time we've had a sizable short position in this in a while. In fact, yesterday, 20% of the orders going through, it originated as short positions. We've had, in rare times, a little bit over a 1 day to cover in Apple. We actually have 2 days to cover, and you might even say, if I wanted to just guesstimate the last 2 weeks from the daily data, I'm thinking we're closer to 3, maybe 3.5 days to cover in Apple. So a fairly large, for Apple, position size that are short. So if you just come in line, I wouldn't be surprised to see that double gap. That is the gap up from the 10th of April, and then the gap down from the 20th of April. You've got that little range out here. In fact, let's zoom in here so everybody can see it just a little bit better. You've got it right there. It starts at about 170.50 and goes to I want to say 172.25, maybe 172.50, right in there. And that is a double gap. And, you know, these things love to either jump past them or go right up to them. As bearish as everybody is, my guess is that after the hours tonight, we probably see this thing go up into this range here. But option market makers are hoping for something between 168 and 172. And 170 would be perfect for them. But we'll see what happens tomorrow. Let's take a look at some others. Of course, you can give me a call at 877-927-6648. And what else? That's one thing. Oh, you can email me at path@tfnn.com. And, of course, you can post a message in the den. This would be a great day to give me a call because it's going to be quiet. We're going to have some activity probably in the first couple hours tomorrow, and then we'll go volume quiet probably until about 1:45, a little pre-show action, and then 2 o'clock the FOMC meeting. And, of course, we've got some other stuff going on. So until those emails and phone calls start flooding in, as I know they will, we're going to start looking at earnings. Other than Apple tonight, we've got Snap after the bell. So we'll take a quick look at that. Now, this one's just kind of hanging around here at the lows. Volume is about the same from yesterday and today. We're about 20 million shares going into that April 4th low at about 1362 at 20 million shares. So we're sitting right on these lows. And you kind of got your bounce out of this thing. You didn't get much. You're coming back down here on volume. Now, this is one where if you're wrong being short on it, you're going to have your lungs pulled out. Yesterday, 24% of all the shares or trades were originated with a short position. You've got 5 days to cover, so it would take 5 days of the volume, average volume in the last 30 days. For them, just the shorts to get out of the way. So you got a pretty good setup out here. I wouldn't buy it before earnings. But you know what? If this thing just kind of hangs tough especially in tomorrow morning and into the afternoon, and doesn't go lower, you got a lot of people sitting on this stock. Now, if it gaps up, I'm not going to chase it. But I think there's a pretty good play back in here from about 14 bucks, probably to maybe 18 bucks on a short squeeze if these guys just don't whiff. Again, 5 days to cover. That was on the reporting settlement date of 4/13. And I think tomorrow we get, what's tomorrow, the 2nd? I think it's either tomorrow or the next day we'll get the next update, which is always 2 weeks behind us. But we at least get some kind of idea of what's going on in Snap. And I'm just going to read these the percentages of short sales. Again, you don't know how many people went home with these short positions for the day, but you know that they were originated short positions. And I'm just going to do it in reverse order here. Yesterday, 24%. Day before that, 22%. 22% the day before that. 24% the day before that. 28% the day before that. 22%, 20%. Then we get back into when the stock was actually going up a little bit, and it dropped to about 17%. Anyway, a lot of people on this. Maybe they're right. If they're wrong, though, wow, watch your lungs.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to go to David in Massachusetts. How are you doing today, Dave?
Hi, thank you, David. Could you take a look at American Airlines, AAL?
I certainly can. What are you thinking about doing with this?
I'm thinking of getting in there.
Okay. Are you betting that crude is hit a high?
Right.
Okay. That would probably be about it. You've come off a buck. It's just kind of gone sideways out here. The downside is how long you'd have to sit in a consolidation. Energy off this 57.44 high down to the $40.65 low on April 26. Now it's just going to go sideways. It was a high volume thrust through the September 6th low. So you came down on high volume. You blew through the previous lows on high volume. So the question is going to be how long you want to sit on this. You've got two options.
Some months. I think the ones with these, when it hit 40.65, I thought that might be the capitulation right there.
It could be. Now, here's the only thing I'm thinking is that it's going to take a little bit more proof, social proof, for crude to go lower. All airlines, 80% of every dime that they get goes to fuel. So there is no bigger input cost to these guys. Why these guys came down on such heavy volume. But you basically blew it out. There's a low at 39.11 for March 22nd of 2017. I would love for that to get pierced. And I think that is a fairly decent possibility if that's really the low that they're looking at, so about a buck lower. I'm just thinking your odds of actually having successful trade are much better there if you go down there and hit that with like 5 million shares.
All right.
You got close here, but again, you got two things, and either one of them are good in my opinion. One, it goes sideways for a week or two, and the low is here. The other one is that it goes down and tests 39.11 on higher or lower volume, or maybe even just the same volume, right?
Okay.
So of the solutions out here, the best case scenario I see is this thing goes sideways, which is not going to make you happy. The worst case is it goes back down a couple more bucks after this bounce. Tomorrow we've got the EIA numbers. I don't think you're going to see a lot of change between now and then in the airlines. I'd wait and see how crude kind of reacts to that. I'd look maybe on Friday for the well numbers from Baker Hughes. I mean, you need a couple of things out here that really make it. Now, one of the things that does fall on the bullish side of this argument is that those well numbers from Baker Hughes have been going up every week now for 4 weeks. So supply is getting bigger in the oil patch. So it's not that I hate this trade. I think maybe you're just a bit early and maybe a bit high on the entry here. Crude has and like most commodities, have a bad history of getting a huge day up and then maybe back down either that same day or the next day. I think you could see a spike in crude that would give you a lot more confidence in entering around this $40 level. Still at $43, I couldn't get into it. If you would have bought it that day under 41, that may have been a defendable position. I just don't see how. I mean, you're a couple of bucks, what, $2 out of that already?
Right. Okay.
So, to me, I understand where you're looking at, but we need a low volume test somewhere out here. I don't have it, and I don't see a lot of reason to rush into this trade. I do see what you are seeing. You had some huge moves up from that June 27th to the December 9th, 2016 move, and that had a lot of energy. We kind of got a little less energy. We're pulling back here to the $40 range. Where do you think this thing can go if you get it?
I think up around 57, I'm thinking.
So you're looking for this gap, on the gap down?
Yes.
From, what is this, the 24th of January, 17 million shares. You kind of filled it.
Almost
halfway.
Up there. You're right, but I'm looking.
Yeah, about halfway up to the 57.44 on March 13th. I would say that if you can buy it lower, The
Yeah.
the less riskier trade is a trade to 55 bucks. This little gap from the 21st of March.
I'm just wondering if this is going to turn into a V shape, David, going back up to the 57 area. It looks like a V shape.
I would say 80% chance is no. You came down
really?
with more energy on the down leg. You got more energy down on the bottom.
Okay.
So what you need is some kind of volume signal that says, hey, I'm done going down, and you don't have that quite yet. You also have a low that's, man, it's so close. It's $2 lower or $1.50 lower. And your odds on a trade, not that it won't bounce, but your odds on getting a profitable trade are much better if you get that March 22nd low tested on light volume.
Okay.
And I see what you're looking at. I know it, but I don't think you're going to get a V bottom in these airlines. There's a lot of people still above you, is 16, 17 bucks, right, that are going to want to sell into every move higher. You would need probably $5 lower, I think, in crude to get a V bottom here.
Okay.
So maybe 63, 64 bucks instead of 67, 68.
Okay. Okay, but David.
I understand what you're looking at.
Okay.
I think you're early. I don't want to beat it too much out here. I think that there's just a little time. And again, I don't think there's any V bottom coming in it.
Okay. All right. Thank you very much, David.
You bet.
Something to watch. Thank you.
Okay. Okay, what else do we have out here? Okay, we looked at that. Oh, I wanted to look at more earnings because we got a lot more earnings coming up. I know everybody's focused on Apple, but then, of course, as soon as Apple's out, what are we going to be looking at? FOMC tomorrow at 2. But that pretty much gets by the worst of them. We've got a handful of more stocks that are kind of a little bit less. But tomorrow morning, let's talk about what's going on. As soon as everybody pretty much forgets about Apple, we've got MasterCard. Now, MasterCard, the energy off this last leg starting on April 4th was good. It wasn't great. But you're going into earnings. If they're good, 183.73 would tie the March 13th high. This leg is not horrible compared to the market. It showed fairly decent strength and fairly decent strength today. Let's take a look at here and maybe even go one more lower. Let's see. You had 3.1 million shares on the 18th, which is kind of the high in April. You now have, getting close there, 2.8 million shares today. So you're going to be close. 183.73 on the high side if it does well. And it looks like 173 on the low side if it doesn't do well. I mean, it could be a lot worse than that. But that kind of looks like the range. Maybe $3-4 higher, $3-4 low. We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Other stocks of interest for earnings tomorrow morning is CVS Healthcare. I don't see a lot in this other than huge volume yesterday, and the stock went nowhere. Down today on fairly light volume. 72.21 is the higher, is the last high on this. So that's a couple bucks higher. $60.14 lower. I know there have been a lot of shorts getting into this healthcare sector lately, but I don't see much of an edge in that one. Estee Lauder, the beauty company, it's just been kind of going sideways in this 145 to 155 area for a while now. You had again yesterday a huge volume day without, a huge move. Today, a little less volume going into those earnings. A couple of those other beauty companies didn't do so well in current earnings, so I think that one, if it acts like its brethren or sisterin, I guess, for a beauty company, may be a little bit weaker. Wayfair got hit very hard on Monday with a downgrade, up a little bit, but its earnings tomorrow. Some of the bigger short sellers on the street have really attacked this stock, saying that I think they're using the F word, F-R-A-U-D, from Citron and some others. I don't know that much about it other than they've done some questionable things PR-wise, which I think show that maybe the leadership isn't as good as it could be in this one. If I was looking for one that jumps the creek below the current lows out here at 60 bucks, I think this is one that could come out with some fairly bad information. Okay, what else do we have? SodaStream. Now, this thing's been a rocket. I still can't understand who's buying it and where they're buying it. But apparently everybody is. I still don't know. I've asked people before on the show to call in and tell me if they've got a SodaStream machine, and if they're using it. Nobody has called in or emailed me or anything. Anyway, this thing's been going sideways for a handful of days, 5 days going into earnings. But, man, I got no idea. Maybe someone will call in and tell me about it, why it's great or why you bought one and don't use it anymore. But there's certainly not much in the chart to say higher or lower. In the stodgy part of the market, we've got Clorox at 6:30 in the morning. This thing's been in a downtrend for a while. Huge volume on the 19th and 20th of April. It's just kind of gone sideways since then in this 116 to 118 range. got to 118.99, just kind of back in it. I don't know how far you can go wrong with Clorox. I'm sure they're into other things that I'm unaware of, but you never know. Okay, handful of other stocks. Been waiting for some of these 3D printer companies to come back to us and bottom out. And man, are we close here on 3D systems. If earnings weren't tomorrow long, I'd be long this thing to right now. Earnings are tomorrow, so I can't take that kind of risk reward. But a fairly decent looking chart. You gapped up back on, what is this, March 1st with almost 12 million shares. Yesterday, 1.8 million shares. Today, just 800,000 shares. Again, I would wait for earnings. I'm not going to go out on a limb on this thing. Pretty interesting. Now, tomorrow afternoon, on Wednesday, we've got some other stocks that are going to be probably pretty volatile. A lot of people, both pro and con, on Tesla. So we get those numbers. Let's see, when is that? Tesla at 405. So that will be interesting. 3D systems, probably not going to make a difference in you futures traders for the NASDAQ. Logitech, handful of other companies like that. Late after the bell, we've got Yamana Gold, a couple more gold companies coming out with earnings. Data is also out after the bell tomorrow night. This is an interesting company and visualization of what's going on in machine learning. This one's kind of holding these highs. Any kind of move a little higher, and I think this goes to 100. But again, this one is a very tough company to figure out because their customers are all other big customers or big Fortune 500 companies, and it's very tough to get a read on it. But this thing's been hotter than a firecracker lately, and that's been it. Qorvo, QRVO, also tomorrow night. Nice move out here. I wonder if it actually had earnings today. Let's take a quick look. Do I see anything? No. Update before the earnings. Okay. Yeah, it may just be a few gag gifts before earnings. Thursday morning, we go into Teva Pharmaceuticals, Blue Apron. That's still in business. Cigna, Cardinal Health. What do we have? WWE, Wrestling, Universal Display. Let's see what this thing is doing. That came down pretty hard, and I haven't looked at it for a while. This thing is basing out in this 90, not even the $90 basis. This thing, 5 days, it's gone sideways at here, just under 90 bucks. You know, this thing kind of looks like it may be washed out. GoPro, again, Shake Shack, Pandora, Stamps.com. Let's take a quick look at that for Thursday, STMP. We're going to go to Ray in San Francisco. How you doing, Ray?
Hi, Dave.
Are you in the soda machine?
Yes, I am. I just recently bought one last month, exactly 1 month ago, and I use it every day.
What do you think about it? Is it much cheaper? Are other people buying it?
Well, I had my friend come over. He helped me do something, and then I offered him something to drink, and I gave him some of the carbonated water, and I mixed it with some lemonade, and he loved it. And he actually went out and bought one too.
How much are they?
I think I paid like $70 for the machine, and then there's like $30 for the the CO2 cartridge.
Yeah.
But I figured that, hey, look, instead of buying schlepping cases of bottled water, I can just make my own.
Yeah. Now, the question I have on this thing was that you did for a while, you could buy Coca-Cola or Pepsi product mix?
I only use it just for bottled water.
Okay.
I mean, just instead of drinking flat water, I'll drink carbonated water.
So how much is the water?
The water's free. I just use filtered water.
Yeah, but I mean, you've got to get the carbon dioxide canisters. How much are they?
Canister is about, I think it was $30 for, it makes up to 60 liters.
Okay. So for us in the United States, We're talking about what? 20 some odd gallons?
Thereabouts. Right. But you know what? For me, it's just a matter of, instead of me having to carry cases I can just make my own. And every time I make it, it's fully carbonated. It doesn't go flat.
So higher or lower on soda on earnings? Yep. Well, we'll come back after the break.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, Ray didn't want to go out on a limb either, just like me for earnings. But you know what? You're in the $90 range. You got to 98.26. If this thing doesn't have bad news, it's going to $100. So keep an eye on it. We've got a question about Qualcomm. Would Qualcomm negatively be impacted by Apple? And I don't think so. Actually, I think you got a fairly decent low in here around this $48 mark. The energy off the high didn't really come off. The question is just when does Qualcomm get going for 5G? And that's what I'm going to be watching. But this thing's been washed out. They hold all the keys to it. I know a lot of people have been from China to Europe, have been beating on Qualcomm to drop their licensing fees. And I don't know how they can make them do it. They're making life rough for them. But whether it's Apple or China or Europe, these guys hold the patents. And the question is whether or not the Europeans or the Chinese just want to use those patents for toilet paper, or if they actually mean something. They've done everything right in the patent field, and they got a ton more for 5G. So if any way you're going to go to 5G, it drives through Qualcomm. The question is, at what point does the market start seeing that? Normally 6 to 9 months. So could it be September? That'd be about 6 months ahead of time. If it's 9 months, maybe midsummer. But it may play around here a little bit longer before it finds a bottom. But eventually, over the next year, I think it's going to do okay. But going to have a lot of patience, like a lot of these stocks that came down on high volume. In the meantime, sell when you can, not when you have to. We will see you here tomorrow. Same bat channel, same bat time. We'll tell you what the FOMC tried to tell you at 2 o'clock and how the market reacted to it. See you then.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.